Hello guys, this year I've made a return of 48.3%. This means for every dollar I have invested in the beginning of the year, I do now have $1.48. I do not often talk about my portfolio and returns, but since I usually talk about investing in the stock market and about finance, this is opportune to share my portfolio with you guys. But before I show you my portfolio, I want to share how I have beat the market in the last few years and what are my strategies, my goals as a stock picker, for example, and then I will talk about my portfolio. Let's start now. So, my goal as a stock picker is always beat the index or the major index. I could have said I want to beat the MSCI World. I want to beat the S&P 500, but as most investors do, they always want to beat the S&P 500, for example, and that's good. But I want bigger things. My main goal is to beat all the index every year. So, for example, for this year, I want to beat S&P 500, Nasdaq, and MSCI World. I'm pleased with my performance last year. I beat the S&P 500. I have beat the Nasdaq index and MSCI World. It could have been a better performance. I'm really happy with some investments I have done. Others don't, but this is what it is. We can. Sometimes you have to miss, but overall I've achieved my goals, and you know what my goals are. So my strategies, I do not have a strategy. I do like to invest in high quality business when they are trading at fair value or undervalue. It will depend on the quality of the company. Sometimes I can buy companies that doesn't have high qualities but could be trading at a really cheap valuation. You call that a deep value stock, for example. I sometimes I do want to invest in growth companies that are not having profits already, but I'm investing future. I do not think I have a type of stock. I'm not a dividend investor. I'm not a growth investor. I do like to find value where the opportunity is. So for that, I always try to invest for the long term in companies that have wide moats or high quality, so their profits can stay for a long time. I always try to think long term. Buying companies at fair value or undervalue, it will depend on the quality, and then trying to compound in the next few years. So this is my strategy. 2022 was a really bad year, but it gave us a lot of opportunities to invest, and this last year 2023 we had some opportunities as well, but now we have to find the next opportunities for 2024. My portfolio at the moment, this is my portfolio. I will share with you. My biggest position is Alibaba. It is 20.8%. Pinduoduo as my second, which is 12.5% of my portfolio. This position growth are a lot this year. I have big profits. It was like 5%, but it's, I do believe, 150% up. So that's why it is a big part of my portfolio. Then one of my favorite companies, Google, which is 10% of my portfolio. Then I have StoneCo, a Brazilian company, which is 8%, around 8%. Another company I do really love, it's T. Rowe Price, 6%. Then I have JD, around 4.6%. Then I have two really great companies, Amazon and Meta, around 4%. Amazon and Meta used to be around 10% on my portfolio, but with a lot of gains I had this year, it will be already around 20%. It could be like that, but I've trimmed my position, and now I do not think that there are better opportunities out there, but I do really love these two companies. Then I have MPW, which is a real estate, a REIT, for example, Bank of America, Pagamento Seguro, Semler, 3M, InMode, Tencent, Citigroup, Estée Lauder, and Zaichi. I could talk in more depth, but I will share. This is my platform. I will talk about the stocks. This is the percentage of exposure to other countries. I can see the sector percentage as well, and industry as well. I always try to invest in companies in which belongs to industry that have high returns on invested capital, like the companies I do have. Um, and this is usually sectors and industry that beat the market. Then this is I can talk a little bit of my about my the companies I do own. I track margin of safety and valuations, a quality score. This is the percentage that I have, and I do compare my fundamentals of my portfolio with the S&P 500. For example, my portfolio is trading. This is weighted. It is indexed to the weight of the which and every company have in my portfolio. So, for example, Alibaba is which is 20% of my portfolio. We will have a bigger weight on these fundamentals. So my portfolio is trading with a forward P of almost 15, revenue growth in the last few years higher than the S&P 500. The companies I do own have better margins, high returns on invested capital, especially when you combine the mean of the last 5 years. The mean of the companies I do own, it's around 25%, which where when the S&P 500 has a return on invested capital around 9%. The dividend yield of my portfolio is around 2%, which is higher as well, and I have a bigger earnings yield. So this is a comparison with S&P 500, which I do always like to do. So Alibaba, I will not extend. I do really believe it's one of the best opportunities. It is a buy for me, as well as MPW. This is a really good company, trading cheap at the moment, and that's why I do own, and I would like to buy more in the future. Pinduoduo, I have a lot of profits during the last year. I started buying Pinduoduo around $60 and increased my position as it is go. My average buy price is around $65 or $66, and it's already a big position. It's trading around fair value, I do believe, when you talk about valuation and the quality, which is it could still be a really good buy. I might increase the position, I don't know, we'll see. Then we have Google, which is one of my favorite companies. In my opinion, the only Mag 7 that is still trading under their fair value. I was buying a lot of Google under $100. I increased my position this year in Google when it dipped in the last earnings, which were really good, and the stock did go down a lot, and it was trading around $120. I increased my position a little bit. Then I have Stone Cold. Stone Cold is another big winner this year. It doubled like that. I was buying a lot when it was under $10 last year, and in 2022 as well. It did go low as $8, and I did increase my position. It is a company with a bright future, growth company, really good margins, and it will be really big on Brazil. T. Rowe Price is another company I've already talked in this channel. It is 6% of my portfolio. In my opinion, still trading at a lower valuation. My fair value is around $120, so this is a great company, high quality, and of course these higher rates, it's not good for T. Rowe Price, but with rates going down, I do believe the price of T. Rowe shares will increase a lot, and for me it is trading still at a good valuation. JD, I'm not extending on that. Amazon and Meta, for example, are two companies I do really like, but for me they are overextending. They are still trading above fair value, but fair value for me it's the price I'm happy to buy them, and at the moment I'm not increasing my position at these valuations. For example, Amazon I was buying around $100, Meta I bought under $200 and under $100. If Meta goes to $250, I might think again into increase my position, but at these valuations I do really think I will be holding my position. I did already trim both of these positions, but it will be a hold for me now. MPW, it was a company that is down a lot, and even this year, which it barely started, this is already down 30%, which I took the opportunity. I do really believe it is an opportunity. This is a deep value stock. It's not high quality, but is a dividend aristocrat. They are paying dividends for a long time with ups and downs. Now their dividend it was cut in half last year, and the stock was down a lot, and now are still going down. They are having troubles, but I do really believe they do not deserve this valuation. They have a higher dividend yield, and I do believe they will share their profits with the shareholders. And in my opinion, this is a really good company. Of course, it's not high quality company. It's not a company I do want to own for a long time. Maybe it's not the type of company I'm comfortable to own. So even though it is trading really cheap, I will have to cap my position to around 5%. Maybe it is only 4% because of this lower valuation. Other companies I do really like and took an opportunity to buy last year was Bank of America. I did bought that under $29 and around $28 and $27, which is really low for a company, really for a bank with the quality of Bank of America. I do own Pagamento Seguro. It's likely Stone Cold, but it's now their valuation is overextending. It might be one of the companies I would look to trim a position. Semla, it's a company I really like. It is on selling healthcare equipment. It was trading really cheap with all the healthcares going down. I bought that around $26, and then it already recovered. But still, I do really believe that is a company with really good fundamentals and a bright future. And it is a really small company. It's $300 million. So there are a lot of potential to grow. So I will still be holding, and in every dip it will appear, I might take an opportunity to increase my position. 3M, a really good company. The stock was down a lot, but it's still a great company. In mode, it is an Israeli company with the really good fundamentals. Now the stock is down a lot, and it is one of the stocks I might take the opportunity to increase my position during this next year. Then I have Tencent, Citibank, Estée Lauder, Zaichi. This is another healthcare equipment maker. So this is my portfolio. There are companies I'm not willing to buy more at this valuation because it is already overextended, and I have this position because 2023 and 2023 was a really good year, and the stocks were trading lower, and there were a lot of good opportunities. Now, when I look into my portfolio and my research platform, I have other stocks in my watch list, but the stocks I have in my portfolio are the companies I do really believe that are the best opportunities out there. For now, there are some buys. Other companies I'm not willing to buy more because valuation wise are not trading cheap as I expected. And if I am a stock picker, I always want to beat the market, and to beat the market you want to buy companies when they are trading under their fair value, for example, and then hold them for a long time and let the compound interest make their work. So I'm sitting now 2024 might have some opportunities. We don't know what the future holds us, but for now I'm still looking, doing my research and trying to find the best opportunities to share with you guys. So this was my portfolio reveal. I hope you liked the companies I do own. If you want more information about one of the companies I own, I can make a special video talking about them. So if you are interested, please write in the comments, and if you like this video, please like and subscribe. See you next time.